Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we're finally here. We made it to Friday, first week in October. This video is being filmed on Thursday night for Friday's trading. That would be October 8th, 2009. No, tomorrow's the 9th, isn't it?
Oh, correct.
We're filming it on the 8th for the 9th, so we'll have to fix that. This is for trading on October 9th. Okay. Traders, in the last video, we left you off with flags, and I put up some charts and I said it looks to me like history, thinking forward now, history will record the formation that we're looking at in the S&P as a bull flag, and then we broke out above it in the S&P, in the transportation average, and the Dow Jones Industrial Average, looking good so far. Same thing in the NASDAQ. So I have some charts I'd like to show you in a moment or two and show you where we are in the indices and why you have no choice but to be a buyer. Then we had sugar with the head and shoulders, and I mentioned we had the failed head test, and very likely is now we're going to start to break down. And sugar has broken down a bit since then, and I'd like to show you where that chart is. A little bit tricky for trading Friday in sugar because there's the possibility of a swing day, buy day that was put in on Thursday's trading by the close. I don't know that I would even consider it as far as being a buyer, but we have to watch out for our rules. So likelihood is I would try to sidestep some part of Friday before I traded the sugar and see if it's in fact a swing day, which would be a downward swing day pointing up, making it a buy swing day. Or if, in fact, we will continue lower. I'm willing to bet we will continue lower, but we will let the markets tell that to us. That is in the sugar market. Traders, the indices are looking good here. Pullbacks need to be purchased still. As you see, that last week or a couple of days back had a little bit of a pullback. Buyers came out of the woodwork. I think it will continue to happen that way, so keep your eye on it. The U.S. dollar's been getting hammered lately. Other currencies around the world, especially Australian dollar, has just been going through the roof, and that will likely continue, so keep your eyes on that. We have a green Omni for Trading Friday, baby. Another green Omni, yeah. All right. I got my eyes on markets. I got alerts set for me outside that door. I want to get to them, so I'm going to show you some charts right now so I can wrap this bad boy up and get back out to my monitors. So with no further ado, let's go to some charts. Okay, traders, what you're looking at is the December S&P daily bar chart. Very same chart we put before you just 2 days ago in our latest video, or our last video, I should say. So far, the analysis was correct about history viewing this as a bull flag. We mentioned it in last night's Omni, we mentioned it in our last video, and now we broke out above it, so check mark on that being a bull flag. The next hurdle is if we can just get back above this, which is a very, very nice parallel channel. We did get into it a little bit on Thursday. If we open up and start moving above it on Friday, then we are back in that bull channel. The bull flag worked. We're in a bull channel. Indicators are bullish. Guess what that means, everybody? What do you guys think it means?
The S&P's bullish.
What do you think it means?
Bullish.
Okay, so I think so as well. All right, traders, let's go look at another chart here. Okay, traders, we are now looking at the Dow Jones Transportation Average daily bar chart. Once again, a nice long bull flag. We did break out of the bull flag. The leader got above that bull flag in a big way, much bigger than the S&P, as the leader usually does. It leads the way. I'm expecting S&P to be right behind that. So we have broken out so far towards the upside in the transportation average. We have broken out of the flag so far towards the upside in the S&P. And right behind this chart is an indicator which I'll show you. Traders, there are many indicators that we use to follow the markets. This particular indicator is the stochastic, the slow stochastic. But all of the indicators I pulled up, and I mean all of the indicators that I pulled up in the indices, are still pointing north. Let's go look at the stochastic. Okay, traders, you are now looking at the daily stochastic oscillator of the December S&P, and pointing straight up. It just turned a day and a half ago. we have some room to come at least up to here. So I like it. The crossover between the percent K and the percent D happened, pointing up as you can see. I like it. All the other indicators which I pulled, I didn't want to show you all of them, but this is one of the main ones. Most, or I should say all, are pointing straight up, and most are down here in the lower quadrants. So they're not even in the higher end while they're pointing up, traders. I like it still. I'm a buyer of dips. We have a green Omni, and I think you should agree with that. So do your homework and see what you think about the world's indices. Next, I'd like to show you the sugar chart with the head and shoulders pattern. Okay, traders, once again, a great lesson in head and shoulders patterns and how they will act if a market is topping out. So I thought I would bring this chart back again because it is working very well. Just a couple of evenings ago, we did a video for you and we presented this chart. It is the March 10 daily sugar chart. It's the bar chart. It rallied up, had a major rally, put in a head and shoulders formation. We were right about here. We put up this head test area because we know that when a head and shoulders forms, usually it'll run up and do a head test, and if it fails, that means major breakdown coming your way. And as you can see clearly, the sugar rallied up to the head test area and hit it and failed. Began to break down, and as of Thursday's close, this bad boy was literally 4 cents away, 4 full handles away from where it hit the head. It hit the head somewhere near 26, 25 and change, traded all the way down to 21.80, traders. That's a big, big move. So it dropped all the way down to here after the head test, and it looks like it will continue. Now, I think maybe a little bit of a breather here. We'll see. We're going to at least approach this with kid gloves tomorrow. If, in fact, it only rallies a little bit, we will begin selling it again. So we will keep you posted on that at the site. If, in fact, we do decide to sell the sugar once again, we will hold a neutral posture until the sugar shows us sometime in the middle of the session whether or not we should be short looking for more downside. Do your own homework in the sugar traders, but a fantastic lesson. Remember, the lesson is this. When you have a bullish market and it puts in a broad head and shoulders like this one, you expect a test of the head, about the middle of the head. If it fails, big downside coming. If it gets above the middle of the head like the gold did just recently, then you have a continuation pattern and a big upside move coming. So you need to be careful with head and shoulders. They do not automatically mean lower if it's a upright head and shoulders like this one. Sometimes they mean continuation pattern. This one meant lower. The one in gold was a continuation pattern. Make sure you know how to handle your head and shoulders patterns. And if you do not, make sure you come on down to our site and we will show you how to do that. Okay, traders, do your own homework and I'll see you at the site. So, traders, you see those charts? You see the bull flags? Flags, 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 baby. You gotta love the bull flags. I have a feeling we're going to go up again tomorrow. The analysis tells me we're going to. The bull flags say that we're going to. So I don't see why not. And we have a trade set up at our site for you in the S&P. Come on down to www.livewithoscar.com. Jump into the chat rooms. They're free. There's an open chat room called, what is it, the open room we call it now? Or is that the copper room?
Yeah.
It is called the copper room. I always refer to it as the open room because it's open to the public and you can come on down for free and hang out in our room where we hold lessons, where we give information, and we help each other become omniacs and get through these rough and tumble markets. And I kid you not, traders, there's a lot of us omniacs, and many of them tell me until they found this site, they did not have a home, they could not trade properly because they didn't have the right crowd around them. So there's a lot of reasons for you to come on down to the site and make sure you do. All right, traders, don't forget that sugar chart. You had the head and shoulders, the head test. It failed. The breakdown. Keep your eyes peeled on sugar. If it starts to go lower, it's going to go a lot lower here. So let's watch. It isn't a spot where it's going to make a decision now. You know, because it came all the way down. Just to explain this, you had the shoulder, the head test. It's come all the way back down, and it's right at the bottom of the right shoulder now. So if it continues lower, bam, big breakdown. If it holds right here, we'll have to sidestep it a little bit and see what it wants to do. So be careful in sugar. Make sure you come on down to the site and give me a buzz anytime, day or night, 702-629-4755, and we will be there to help you out. Okay, traders, as I always tell you, a stop is your best friend. Always trade with stops and always place them first before you place your orders to get into a position. The stop is there. You know you're safe. Emotions come out of trading. And with that in mind, always keep your emotions out of trading. One of the best things you can do is to repeat this to yourselves over and over again, because it really does help keep your emotions out when you're trading. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.